Today, I'm going to show you how to invest your first £100, but you can follow along with £10, even £1 if you like. I firmly believe that the single biggest risk when it comes to investing is not investing at all. But I understand that this can be confusing and a bit daunting to get started. So, that's what we're all about today. And we're not just talking high-level theory either. Compound interest, buy the dip, live, love, laugh, slap it on a t-shirt, slogan kind of things. I mean, there will be some of that because it is important, but there'll also be the exact button clicks that you need to make to get yourself started. Because let's be honest here, the UK has a problem. We are the worst investors in Europe. I mean, put that on a t-shirt. Seriously, the Germans, the French and the Spanish all participate in equities at a higher rate than the British. And what do we do with our British pounds? We stick them into savings accounts. About 1.8 trillion sits in cash savings in the UK. Nothing wrong with a bit of cash for short-term savings goals, but that's £27,000 for every man, woman and child in the UK sat in savings accounts. 400 billion of that is sat in accounts that produce a 0 to 1% return. That money's just rotting away, being eaten by the effects of inflation. HSBC did a study into the reasons people didn't invest their cash. Amongst the main reasons were they didn't know how and they were worried about losing their money. These are the two concerns we'll look to address today, because how much of that 1.8 trillion is placed in cash savings by people who are scared they might lose their money, so instead they put it in a place where they will definitely lose their money long term. It's not the rich paying this ignorance tax, they invest. It's those who would benefit the most from the effects of the stock market that ultimately miss out. HMRC data found that 90% and 80% of the least wealthiest and middle-class families elect to open cash ISAs instead of vehicles that invest in equities. I think the UK's view on what investing actually is has been confused and warped to the point where they see the stock market as risky speculative gambling and cash as a safe investment. It's not. It's filled with the very real risk, and that is the long-term destruction of purchasing power due to the corrosive effects of inflation. This book was written in 1940. It's a great read and the core lesson still holds true today. Basically that the traditional finance world is full of robbing bastards. But in the book, there's a definition of investing from all those years ago that I still think rings true today. Speculation is an effort, probably unsuccessful, to turn a little money into a lot. Investment is an effort which should be successful to prevent a lot of money from becoming a little. By choosing cash savings over investing for long-term goals like retirement, the British public are turning a lot of money into a little. And by confusing investing with speculating, meme stocks, NFTs, the latest investing craze, the British public are being turned away from one of the great wealth protecting and building opportunities that we all have available to us. Since 1950, the global stock market has produced an average annual return after inflation of 6.7%. That is the trend that I'm looking to capture. It's that ride that I want to be on because of that track record of the global stock market to outrun inflation long term. Now, of course, you have the option to invest in specific individual companies, Tesla, Nvidia, Amazon, whoever you want, and I'll show you how to do that. But my preference and the core investment approach that I use in my portfolio is by buying funds to capture that trend. Global funds in this case. You'll hear these funds referred to as index funds and ETFs. The difference between the two are not big enough for me to go into today, and I've linked an article below that covers them in more detail if you want to take a look at it. But at a high level, there's simply one investment that you can buy that represents, in this case, the global stock market. You can also get ones that do things like track the American stock market or the UK stock market. Now, it's not as simple as just buying one of these investments, hopping onto the ride, and every year you get a fixed return. This is a bumpy ride, and the value of your investments will go up and down day by day. And some years you'll be down overall. In fact, there have been times in history where the value of your investments have fallen 3 years in a row. This chart shows that nicely. The average return I spoke about is this grey line here. It's near 10% in this case because it's before inflation. And notice how hardly any years come close to the average, and that in reality, there is large swings up and down in the value of your investments throughout history. I think good practice really is to say any money that I'm investing is money I won't need for 10 years. This is the volatility you need to be comfortable with if you want the benefits of investing. If you want the juice, then that is the squeeze. And the only way to really know if it's something that you can handle, if it's something that you can stomach, is to have a bit of skin in the game. Luckily, as I said, you can get that skin in the game for as little as £1. So let's just get on with it, shall we, and get down to business. Grab a phone or computer, some form of payment details and a novelty t-shirt of your choice, and let's just get on with it. I'll be using Trading 212 today for this example. I've been using them as my main ISA provider now for a couple of years, and they allow new investors to start with as little as £1. You even get a free share worth up to £100 when you sign up using the link in my description and deposit £1. You can use any broker you like. The theory is the same, the button clicks are obviously different. So below I've dug out some videos breaking down the button clicks required for as many UK brokers as I could find. I've also put together some free resources to help you with this broker and any others that you might use, but we'll talk about those in a moment. So download the Trading 212 app onto your phone first. The process that I'm about to go through is basically the same on desktop, but I'm just going to focus on the phone today. You'll first be asked to pick an account type that you wish to use. The Invest account and ISA account are pretty much the exact same thing, but the ISA will protect your investments from dividend and capital gains tax in the future. If you've never invested before and you've not used up your 20k ISA allowance for the year elsewhere, then I would be opening up an ISA account. The CFD arm here is very much in the speculation category we spoke about before. 212 themselves advertise that over 70% of people who try CFDs for the first time lose money. So if we choose the ISA, you'll then be asked to provide information like name, date of birth. They will also ask you for income levels and if you have any savings. They will also ask you for a copy of your passport and driving license as part of their KYC Know Your Customer requirements. You're then going to have to take a rather awkward selfie. You'll then be asked if you want to create a pie or manually deposit some money yourself. I will make a manual deposit and you can either deposit now or there are plenty of ways that you can top up money onto the app at a later point if you want to. I normally press the 3 lines here and you can just see at the bottom it says deposit funds here. So this bit is important. You have a number of ways that you can pay money onto the platform here. The top 2 options allow you to put money on the platform for completely free, but the bottom options here, once you've deposited more than £2,000 onto the platform, you then pay a 0.7% fee. No one needs to pay this fee. I always use these top options, it's very quick. You just get bounced around between your bank and Trading 212, and then you get this slider option asking you how much you want to deposit. Or if you press the dots here, you can just input a number. I've deposited £100 for the purpose of this video, but just make sure it's at least £1 that you put on the platform. If you don't get your free share at this point, the £1 deposit should trigger this, then press the 3 lines again at the bottom here, go to promo code and just input Damien, D-A-M-I-E-N. So buying a fund couldn't be simpler. Trading 212 have hundreds to choose from, and they include a list here of the most popular ones. Below I've also included a spreadsheet that lists some of the most popular fund choices on all of the major platforms, focusing on the USA and global stock market. I've tried to explain what they do, the fees, and just some stuff to help you with your own research when picking your own fund. As I said, Trading 212 have hundreds of funds to choose from. I'll show you the process of buying one fund that tracks the global stock market. I'm showing you this fund because it's a fund that I use. Please understand this video is to show you the process of buying a fund, and I'm not saying you should buy this actual fund. Far from it. I'm not a financial advisor, and even if I was, I don't know your personal circumstances, so I'm not qualified or in a position to make recommendations to you on what you should invest in. This is more just to show you the functionality and to show you the process, which is really quite simple. The fund I'm buying is VWRL. V is for Vanguard and WRL is an abbreviation of World. So this is Vanguard's World Fund. This version of the fund is income paying. All that means is any dividends, which are shares of the profits the business is paid to you for owning them, are paid as cash into your account. So in this example, every 3 months, you'll get a payment onto Trading 212 or whichever broker you use. And that is that dividend payment. It's these dividends and the growth in the price of the fund itself that make up the 2 types of gains that we hope to see. By being in an ISA, we shelter both from tax. When you start investing, the most powerful thing that you can do with these dividends is use to buy more of the fund with them. So when I get those payments, I just throw them straight back into the fund. I quite like doing this process myself. I find it's a bit fun getting the notification and making that reinvestment. But VWRP is the same fund as VWRL, but instead it does that reinvesting of dividends for you. This is known as an accumulation fund. On the cheat sheet that I put together, I've listed both income and accumulation version of funds where possible, so you can see how the names may differ between the 2. Once you have the fund that you want, just press buy and then you're met with a slider and dots option again, and you can simply buy the fund and that's it. I'm now the proud owner of, in this case, a fund that represents the global stock market by buying into over 3,600 different businesses at once. And if you want to buy a specific company like Apple or Meta or whoever, you can do that in almost the exact same way. By clicking on the magnifying glass here, finding the company you wish to buy, and it's the exact same process as before. Again, as little as £1 to start. I recently sat down with my son the other day and set up a small investment pie inside my ISA account so he can stick some pocket money into it and get used to how the market performs. I've said to him he can't touch it until he's 15. And my hope is by the time he gets to 18, he realises that this is something that works and that he could benefit from and he can get on it early. The issue is now, he asks me every other day if he's rich yet. And I have to remind him that putting £5 in won't make you rich. And it's the same with this. Sticking a quid in isn't going to change your life. But if it gives you the confidence that this is something you can do, that might just change your life. I think the regulator in this country does a pretty good job of protecting people, but a really bad job of educating people. Risk warnings around products are essential, but so is an adult conversation around the benefits of investing and then practical, actionable education about how to get involved. I sit here trying to spell it out to people, but all the while I'm paranoid about showing you a particular fund in case in any way it's seen as financial advice. But if you want that actual financial advice, if you want to speak to a qualified advisor, they will say to you, well, unless you've got at least 200 grand, I can't help, because the regulator's requirements placed on me are such that I need you to have that sort of money to justify my time. My question is then, how is anyone meant to get to £200,000 in investments if no one ever shows them how to invest? I wish the regulator would provide free, informative content on the benefits of investing and the ways that people can do it. So the vast majority of the UK population who do not qualify for financial advice can get themselves started, and we can address this problem of billions of pounds of cash rotting away in accounts. It's the regulator's job to protect first and foremost, but by educating the public, you protect them from seeking out information online, from bad actors, or falling into shady schemes like Cash FX or whatever the latest pump and dump Ponzi scheme is.
It's not a pyramid scheme. It's not even a scheme per se.
This education would then improve the financial well-being of the nation and increase active participation in work-based schemes, reducing the burden of a growing pension crisis. Teach a man to fish and all that. I mean, I'm speaking in t-shirt slogans again, aren't I? Look, I hope this helps some people get started on their investing journey. I've also now got a shed load of stupid t-shirts with silly slogans written on them. I think this is my favourite one. If anyone wants one by any chance, leave an investing related pun below, and the top voted comments, I'll send one out in the post. And whoever is the top voted comment overall, also throw in a copy of this book. I just need to warn you, I have worn them. I'll chuck them in the wash. To be fair, some of you probably prefer that I didn't, wouldn't you? Have a little sniff and all of that. And they are an extra large. I've been hitting the gym. Gonna need an ISA soon to protect these gains. That's terrible, wasn't it? Let's end the video there.